Hey guys, can everyone hear me clearly? Hey Matt. Hey Kelvin. Hey Vincent. Hey Joa, nice to see you guys, man. Hey Ajay. Oh man, uh I'm feeling better, right? I'm feeling better, but I've not fully recovered, right? I think apparently I got this sinus infection. So it's like a sinus infection and my cough is still there. All right. So it's sometimes it's hard for me to like say a full sentence. After saying a few sentences, I get very breathless. Also, COVID really took its toll on me. Yeah, I'm not sure it's a cat fault. Right, the cat didn't go out. I also want to go out. Who went out? Both me and my wife got COVID at the same time, which means we got it from the same external third party, right? So yeah, it's not like I passed to her or she passed it to me. We both probably went out and were unlucky enough to one of the nights out for dinner, right? We probably that's how we got it, right? Yes, I did lose my sense of taste and smell, right? Hey, that's really nice to see you, Robin, Vincent, Ellen. Nice to see you guys. Good thing is that my baby, my kid is like he wasn't affected, right? And we had a helper to take care of him when both me and my wife were out, right? If not, it'd be very tough to like take care of the kid without passing the virus onto the kid, right? But man, it is freaking terrible. At one point in time, I thought I was going to die. I was like, this is it, right? I also desperate. I went to the doctor. I went to a doctor to get what was it? In Singapore, it's a controlled drug. It's like codeine, right? It's basically a super strong painkiller, right? So I took it and just like I just want this thing to be over. But yeah, I feel better already. Hey Leandra, nice to see you. Hey Bundit, nice to see you too. Joanna, nice to see you too. Hey Karban, yeah, nice to see you. I think I replied you in the VIP room, right? Samoa, Leon, let's get rolling today. Hey Bob, nice to see you tune in too. All right. Today's session is going to be pretty fun, right? Today's session is on it's something I think if you're in the VIP room, you might have seen us bouncing ideas off it, talking about it previously. Some of you guys were asking like how exactly or what is the entire thought process that I have behind getting into trading setups, reversal trading setups, right? What time frames to use, right? The Nike tick kind of setup, right? A lot of it we know that's the entry. Nike tick, that's the entry, take profit. But all the there were a lot of subjectivity, right? There are a lot of subjectivity when it comes to looking at when you actually see it, right? And where do you put the ideal invalidation? Where do you put the break even? Where do you put the partial profit? Right? Where do you usually those are the few things. Where to put your stop loss rather? Sorry, right? I know it's getting yeah. Where to put a stop loss? So I've been very closely observing the this trading strategy for a while. I even created an expert advisor, right? It's for MT5, right? I use MT5 because of the tick data, right? It is able to process the back testing much faster. I shared some of the results in the VIP room. The good thing is that the results are very good, meaning that it's a very decent profit factor, right? When it comes to using the Nike tick setup. But there were some settings that I've changed, which I'll be showing you together. Which I'll be showing in this example later. I tweaked some settings, right, to improve the profitability, and I'll be sharing with you guys today. Right, Iman, you did a lot of research yourself, so if you have some stuff you want to share with me, to share with the rest of the team, let me know. I'll be more than glad to pass on the message. All right. Yeah, Vincent, we talk about idea and validation today too. Okay. Hey, Simon, nice to see you tune in. Right. Okay. It's nice to be back in action. Right. Nice to be back in action. The past 1 week has been absolutely terrible. Right. I do want to know, is anyone here for the first time? I see a lot of usual names, right? But is anyone here for the first time? What is this? Is this a, oh, who raised your hands? I can actually see who raised your hands. Cool. Okay, we got Mickey here for the first time. Welcome. Data Prasad, definitely not here for the first time, seen you around. Julio, seen you around too often. All right, if you're here for the first time, let me know. Okay, I do need to point you to the correct places, resources to read stuff, right? But let's begin today's session. Disclaimer as usual, guys, remember that everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. Please do your own due diligence before you guys trade, okay? Now, moving on from here, of course, because today is a trading strategy webinar, it should not be construed as past performance, not indicative of future results, right? And this is not like a recommendation to use it. You still need to use your own discretion, okay? The VIP room, right? Mickey, I'll show you how to get access to it in a bit, all right? Introducing your host for today, right? For those of you guys who are here for the first time, right? Here for first time too, Mervin, welcome to the show, all right? My name is Desmond Leong, right? This is me, I'm Desmond Leong. I run the award-winning research firm Everest Fortune Group, right? Also the Forex Army, right? Finalist for 2019, 2020, 2021 for best FX and best equity research, right? So we usually work with the major financial institutions on telling them where the markets are going. But we have a special partnership with IC Markets where we're bringing you guys the good stuff, the juicy stuff, the stuff that already take a trading to a next level, right? And there's something I always like to share with you guys here is that you don't need 30 years trading the markets to be a profitable trader. You just need 30 days learning the right stuff, right? Tuan, no worries. Just to check, can everyone hear me clearly? Because I have Tuan saying that he has some problems with the sound. Okay, got it. All good. Okay, no problem. So I think Tuan is probably your speaker or something. Okay, but anyway, yeah, you just need 30 days learning the right stuff, right? We teach the stage where we are at now, we teach a little bit more advanced stuff, but I'll show you how to get some of the older materials which we have covered previously. Hey, Akibong, nice to see you tuned in. Okay, now let's a few things to take note of, right? If you want to find some of the tools that I built, head over to forexarmy.com, right? Otherwise, on my Instagram, it's just Comfy Desmond. Nothing much there. Me, my kid, my cat, and my wife, right? Nothing much there. Okay, these are the few things that we're going to touch on today. Okay. Oh, before I go here, I do need to show you guys YouTube IC Markets playlist. I'll send you guys to this this playlist over here. Please go check it out, right? Please go check it out, right? It contains all the webinars that, oh man, it's not fully updated yet, right? But you can start all the way. No, it is updated. And trading psychology is not in here. Yeah, start all the way from the bottom and work your way all the way to the top. Okay, it's a lot of webinars, but if you really go through them, right, it will give you enough information. You equip with all the knowledge you need to be a better trader. Okay, first place to go to. Second place, to register for IC VIP account, you want to go to ic.genesif.com. Okay, this is the link which I'm just sending to you guys. As long as you have a live IC Markets account, you'll get access to it. Oops, just let me close this. Right, so you just need to click register, fill in your details. If I'm not wrong, there's a small bug when you're registering, but it should still work. So I'm just going to create a random account over here. Right, right, QWERTY. Yeah, you can just register an account. If I'm not wrong, I should say that there's that it works perfectly, right? Then you'll be taken to this page. You just need to agree to the disclaimers, join, right? You'll notice that there is nothing in the room yet. Yeah, there's nothing in the room yet. Vincent, the reason why is because most people actually watched it on, like, for example, on the GoToWebinar series already, right? The YouTube is when IC Markets hasn't put in a lot of effort to like spread it around. right? So it's more or less people from the webinar who went to rewatch it. Okay. So yeah, when you come in here, what you want to do is you want to click on this part here, request access. Okay, click on this, and then request to join channel. Type in, please let me in. Type this in. Upload any files that you have, right? So in this case, let me see. Maybe I'm going to upload a very simple file over here, right? It should just be a screenshot of your account. Upload it. Once it's done, how it looks like on my side is that I will then see. Just give it a second. I'll then see, okay, you know, we got some requests coming in. This guy wants to join. Please let me in. What are the files he has attached? If you have attached the correct files, I will accept you and I'll give you an account to join. Okay. Now, a few other things you can do with the IC VIP room. At the end of this webinar, I want you guys to practice as much as possible there. In the chit chat section, you know, you can, oh, thanks, Imad, give you a lead sign, right? Yeah, at the end of the webinar, can come in here and chat the rest of the guys. Otherwise, right, you can also practice analysis here. This is one of the main things that you want to do, right? So if you want to, if you were thinking, maybe you just drew a Nike tick over here, and you were saying, hey, Desmond, right? Is this a valid Nike tick reversal, right? What are you referring to? Highlight this, click this button, link object to text, select what you just drew, like this 1 to 7. You notice you can select in a specific Fibonacci retracement lines, right? And you click confirm. When you send a message through, how it looks like on my end, or anyone else who hovers over your message, is that you can see that it lights up on their chart when they hover the mouse over your message, so they know exactly what you're referring to. Okay, so yeah, this is a place where you can practice analysis. I will jump in and give as much feedback as possible. I think Imad did mention that there was a couple of nice setups Imad did. Do you know which one he did it on? Was it pound, euro, franc, euro pound, or is it pound franc or something? Chat tracker allows you to track all the previous messages that were being sent. Which one was it though? GBP USD and GBP JPY, or is it pound dollar? Yeah. Oh yeah, I remember this one here, right? And price hit TP over here. So this was an analysis. I know it looks a little bit messy, but this was an analysis that was done by Imad. So he shared something like, all right, title, 3 fips and a swing low, bullish bounce, Nike tick formation, 1 to 7, right? I know you can't really see it, but it actually lights up. Is this line over here, 1 to 7 over here, negative 27 is down here. I can see 1 to 7.2. You can see it lights up a bit, right? 1 to 7.2 over here, right? And a swing low support, right? Swing low support over here. So all 4 of it, it touched this level, it bounced up, and he hit his TP, adjusted TP, I think, right? Close off his position over here. So he closed off the 23% retracement over here. This trade management part, I'll explain to you guys later. But yeah, so in this example, this is how you can, yeah, it was a week ago, right? So yeah, so in this example, it's how you can come and practice, and I'll give my feedback. You know, I can jump in, I'll say it's a good setup, you know. I'll give some feedback over here, you know, we don't use 1 to 7 projection, we can use this, and it's where you can keep practicing your analysis. The more you practice, the better, the higher chance you can get it being correct. Okay, now without further ado, let's begin today's session. All right. Overview of the strategy, right? The reversal trading strategy, more commonly known as the little Nike tick formation. Okay, let me really dive into detail for this. I have one dedicated session today just to teach you guys how to use it properly. After I'm refining it a little bit here and there, right? But let me explain it to you. It's primarily a trade where you play the reversal from here, right? Why we call it a Nike tick, right? Why we call it a Nike tick is because it looks like a Nike tick. Price would form something you know, price could form something like a Nike tick, and you play the reversal at the top of the Nike tick, and you play it down. You play it down just that little bit, right? You try not to play it beyond this, the start of the Nike tick. At the same time, we try to play a 23% retracement of this entire move. What does this mean? I will explain later. Okay, now, sometimes, I'm not sure if you notice, price reverses right before it even hits the Nike tick. Maybe just 1%, I know, a few pips before that it reverses. I'm not sure if you guys have noticed it. If you have, send it in the comment section. That, you know, price reverse right before 127. If you have experienced it before, yeah. Vincent says that you've noticed it quite a bit. And there are ways that can fine tune it, right? Samuel notices it too. Okay, so we'll talk a little bit about how we address that in this session today. But the main thing that we're going to look for is we're looking to play this little Nike tick over here. Yeah. So Vincent saying, you know, if price didn't touch the 127, he'll still hold a trade, right? Akibong also saying that, you know, he has such experience over between 127 and 136. Okay, yeah. Let's touch on a few of these strategies today. Okay. First thing first. How does this look like on the chart? I can show it to you guys, right? So this example here, okay, this is a reverse Nike tick, right? So this is a reverse Nike tick I'm talking about over here. So when you have a Nike tick that goes up like that, so this is where you sell and you go down. The opposite is true for a trade where a reverse Nike tick, right? So imagine a Nike tick, you just flip it upside down. So you got a reverse Nike tick over here, right? And then you buy from here. Okay. Now this is the example that we see over here. This is the reverse Nike tick that I'm seeing over here. Very nice. That comes all the way down. Okay. Let's draw a Fibonacci. Okay. So the first thing you notice, right? At the start, it needs to have a little movement down first. Okay, so the reverse Nike tick, right, has a nice little movement before it, right? It needs to either have a move down, right? It needs to have something before it, but it cannot, right? You cannot start the a reverse Nike tick in the middle of nowhere, right? Meaning that you cannot start it in the middle of I want to start it over here. It won't work, right? Because there, you know, you can see that there was a preceding move over here that was over here, right? So you need to start it at the beginning of you know, a beginning of another move up, right? So you can see this is one movement here. I'll be showing you a couple more examples later, but yes, you know, when you start the beginning of a Nike tick or reverse Nike tick, is that you need, you know, it needs to start over here. Now, this is the move we're looking. It's going to come all the way down. We're looking to play the move from here. Let's draw the Fibonacci, right? And let's see how it looks like. I have my Fibonacci retracement from here all the way to here. Okay, where's the 127? You see price touching the 127 over here, touching this level and bouncing up. Okay, touching this level and bouncing up. This is essentially the overview of the trade. Okay, let me talk about entry criteria first, right? So my previous entry criteria, or time frame first. Time frames that works pretty well on. It works pretty well on the H1, right? It can also work well on the H4. That's what I realized. I've been testing it on the H4. It can also work on the H4. I tried on the M1, I tried on the M5, not so effective, right? M30 still is okay, but not great. The best seems to be on the H1 and on the H4. Okay, this seems to be the better ones out there. Okay, sometimes the H4, the nice thing about H4 is that it's the trade still works out, but it is less intense, right? That means you can still, you know, it doesn't happen within like 5 minutes. Which can happen in a H1 chart. But for H4 chart, you know, you usually have a little bit more time to let it play out, right? So I will stay away from M1, I will stay away from M5. Can consider M30. Best case is usually H1 and H4, okay? Okay, Vincent, we talk about the negative 27 first, right? But let's talk about entry criteria. Okay, what is the entry criteria to enter the trade? Now I've changed it so that the entry criteria is just this. It's just the 127 fib extension. As long as you find a very nice Nike tick or a very nice reversal, that is enough. That is enough to take a trade. It's funny, but it is strong enough in itself. That's enough to take a trade. The bonus is when you can add in additional Fibonacci retracement, Fibonacci expansion. These are like the negative 27, negative 61.8, right? And then we got Fibonacci projection, right? We got 100%, you know, we got the 78.6, we got the 61.8, right? But all these are actually bonus. Even the support and resistance levels are bonus. Okay, that means as long as you can find a very, very clean 127, that's enough for you to set up your base entry, right? You're talking about risk allocation. I'm just thinking maybe something like 1%. With every additional one that you have here, you plus 0.5%. Okay, plus 0.5 plus 0.5. So if you have all of it, right, you have plus this, total, you should have maybe you allocate 3% on the trade, right? 3% on the trade. And this is really if you have all of it lining up perfectly, right? You have retracement, extension, expansion, projection, support and resistance, all of them lining up nicely. Yes, a good chance you can reach a good 3% on the setup, right? But just by itself, 127 is enough. Okay, now let's talk about the exit criteria. Okay, let's talk about the exit criteria. Okay, now that so Joanna is saying, is it possible to anticipate a Nike tick, right? So what I usually do, right? What I usually do in this kind of situations over here is that when price is forms a V, when price forms a V, sorry, not over here. So I usually don't bother if price is still over here, right? But the moment price forms a V, okay, it forms a V over here, then I start looking out for the Nike tick, right? Then I start drawing my Fibonacci, all right? Okay, 127, all right? Then I put it over there. I put a pending order over here, okay? I put a pending order over here, and if for those of you guys who have the trade manager and know how to use the white line, the white line basically means cancellation of a trade. What I then do is I put a cancellation trade probably about over here. That means if price, right? So the reason why I put that is I allow myself to have a little bit more peace of mind that the trade is being managed by itself, right? So if price drops down here and takes a trade, that's great. I get into a trade straight away. But if price, you know, comes down, but then it comes all the way up, you know, comes down, comes all the way up to here, right? It actually closes out the trade and my pending order is removed, right? My pending order is removed. Why this happens is because in this case, right, this doesn't look like a nice reverse Nike tick anymore, right? It looks like a reverse Nike tick and suddenly it turns into some other brand, right? If it comes all the way up to here, right? I only want to take the trade if price makes a straight B line, straight line all the way down to my entry over here. So that's why I use a cancel trade and actually put it slightly, I think I put it about the 38% retracement from here down to here, right? So in case price forms a different funny movement, I would get out of this pending order, because the last thing I want is I don't want price to come. The last thing I want is, oops, where's my pen? I don't want price to come here, then come down, then trigger my entry, right? Because in this case, I have one, it's not my original Nike tick. My original Nike tick would have been this movement over here, right? This is now some other funky pattern, okay? So that's the important thing to take note of, that when you are doing a Nike, when you're placing pending orders, right? Okay, it makes a lot of sense. Can you cancel trades on pending? No, you can't. You can do it if you have the MT4 trade manager, But if not, yeah, if not, then it doesn't work. No worries, Desiree. Right? So yeah, you can't do that unless there's an MT4 trade manager, right? A good question by Fabio: does it work on all pairs? Right? I noticed it works on some better than the others in a funny way, right? We'll look at it in action when we do some back testing ourselves later. Okay, but the thing about Nike, especially on the H1 chart, is that you need super good spreads, right? So the good spreads, I mean, if IC Markets clients, right, usually you have really good spreads, right? But on the exotics, right, those like maybe on pound Kiwi, pound Aussie, the spreads are a little bit too wide, just because of its exotic nature. So it's a little bit harder to scalp on those. Okay. Now let me show you the exit criteria first. Okay, let me show you the exit criteria. I have been placing my stop loss and it seems to work pretty well at a 145%. I would ideally invalidate at the 138%. Okay, I will have a break even at 11% of the recent move. I'll close up part of my trade at 11% of the recent move, and I have a full TP at 22%. Notice I don't put 23.6, right? Because every time I put 23.6, price drops all the way and it reverses right before the 23.6% over here. Okay, so I tend to adjust it to be 22% of the recent move. Now, why do we have break even and why do we have partial profit? It's because of one thing. I noticed, right? Correct me if I'm wrong. It was too much. What? It depends, Vincent. It depends. We'll touch on that later. Imad did mention that he says that he doesn't play it on dollar yen. He prefers the Aussie pairs on it. Okay, so that's a good point. Now, so the reason why we have break even and partial profit, right? What I do notice with a Nike tick is that if this is your entry over here, right? You have a Nike tick that comes all the way up to here. But what I notice is that when price reverses, like even if it reverses a bit, if it comes back up again, you notice it is not as clear a Nike tick anymore, right? This is like ASIC logo or something. It's a different brand, right? And it becomes less effective, right? There's a lower chance, right? There's a lower chance that it will reverse a second time. When it does work out, right? When it does work out, the reversal is really nice here. It goes down, it hits your TP, take profit, you get out. But when it comes down a bit and then it goes up again, that is more often than not, the trade doesn't work out, right? That means it comes down maybe halfway. Like if this is your TP over here, right, and the trade comes down just halfway, and then it bounces back up. Most of the time when this happens, right, it actually goes all the way to hit your take profit. That shows that the initial impulse influx of sellers over here at the Nike tick is not enough to push it down all the way. If it was, right, you would be able to see very nice movements like this, right? You would be able to see very nice. Erase everything. Look at this over here. When it does work out, right, you notice that it works out perfectly, right? You can see it touches the 127, it reverses all the way, get your take profit and you get out, right? It rarely ever, it rarely ever goes up, comes down, and then goes up again, right? Usually in those circumstances, it just stops you out. So that is the reason, right? That is the reason why we have break even and 50% partial profit, right? So if it reverses halfway, we lock in some profits, right? We lock in some profits, right? And then when we move our stop loss, to our entry, to our break even, right? So, right, if price doesn't drop all the way and it instead comes back up again, we get stopped out at break even. At least we've made a little bit of money. From a psychological perspective, it's also better. We at least we back some, we put some money in the bank. It doesn't feel that bad if the trade doesn't work out, right? I'm not sure if you've noticed this, Imad, right? That yeah, if when it reverses a little bit and then it goes back up, that it tends to just the trade doesn't seem to work out that well after that, right? You can share with me your observations on their behaviors, okay? Especially anyone else who have been using the Nike Tick kind of trading strategy, okay? Kerban is asking Aussie pairs. I don't think exclusively Aussie pairs. You can use it on a couple of other currency pairs. We'll explore them together, right? But I do think, I remember from my experience that they do tend to work slightly better on Aussie pairs. Maybe not Aussie Kiwi. Aussie Kiwi, AUD, NZD is absolutely crap, right? Let me just pull up my chart over here. Okay, so let's look, for example, at euro dollar. Okay, same thing over here. So what you notice over here, right? It looks like the trade didn't make money, but in actual fact, look at this, touch the 127, reverse perfectly, and then it shot up again. Okay. Oh, Fabio got this move, right? USDs are always better, right? USD are the better, right? I notice there's always resistance or support at 1:1. So what do you mean there's always resistance or support at 1:1? So anyway, in this trade here, right, when we take a 23% retracement, can you see this? You can see how price reversed very nicely from here. It dropped, it touched this level here, the 23% retracement, and then it got out. So this is like a take profit, right? This would have been your take profit. Now the problem with the 23% retracement tool is that it tends to line up with the start of the Nike tick, right? And so in trading, this is called the pullback. This is a pullback support. Remember, let's talk about the pullback support, right? And there's the danger of playing it to the 38%. So most of the time, it doesn't reverse all the way to the 38% because of this movement here. You always pull back to the 23% and the pullback support, right? And usually for Nike tick formations, if you most of the time there's a little bit of an uptrend, right? Because if you think about it, I'm going to use a very, very thick highlighter over here. Is this, yeah, a very thick highlighter. You notice a Nike tick formation, right? The thing about Nike tick formation is that this part over here, this part is an uptrend, right? So it's very, very difficult. It's very difficult for price to break this level and come down to the 38% over here, because it will need to break a 23%, you need to break a pullback support, you need to break an ascending support, right? So that is one of the reasons, right? Do we only trade Fibo based Nike tick? Yes, Kerban, we only trade the Fibo, a Nike tick based on Fibonacci, right? So I'm reading a question by Vincent. If I put my stop loss at 145 and show 127, when price bounce from 127, there's some resistance before price continue to drop, and I think the partial breakdown is a good way. Yep, that's true. Okay, so this is all right. So this is an example. Now, let me see. An important thing that people a mistake that some people tend to make, right, is that you don't adjust your take profit. You notice your entry would have been at the 127, so your entry technically would have been over here. Okay, I'll show you how. I'm going to make the 30-minute chart for this, but I'm going to show you how sensitive this is, right? If you put your entry, right, if you put your entry exactly at the 127, right, that means your entry would have been over here. Okay, most people, right, they will put their take profit because they're putting a pending order, right? Their take profit, they'll put their 23% over here, right? And so maybe that 23% will come all the way down to here. Now, you notice, you put it down to here, you would have missed your take profit over here. Price would have missed your take profit just by the little bit. And if you had experienced that before, right, price missing your take profit just by a little bit, this is one of the reasons, right? It's because you then need to move your take profit. If price goes up a little bit higher, you need to move it a little bit higher to here. Price needs to follow it all the way. If the entry is over here and price continues to go all the way up to here before reversing, you need to move your 23% take profit along with it. Okay, important consideration to take note of. Now, another important consideration is that don't put your take profit beyond the start of the Nike tick. No matter how tempting it is, right? Do not put your take profit beyond this Nike tick. Always put it before, because remember, in our trading strategy, stop loss beyond, take profit before. Correct? Your take profit should always be placed before a key level. In this case, right? If this support level is a key level over here, right? If this is a key level over here, right? You want to put your take profit just slightly before it, which is why I would then use the in this case, I'll do a 22% over here. I'll use 22% as my take profit. Okay. You notice 22% usually put you safely, a little bit safely before the support level, the pullback support level. Okay. Yes, dynamic TP with the 22%, exactly correct. Okay. Let's see. All right. I will show you a couple more examples, right? I'll show you a couple more examples, right? And see how, wow, so many. Okay, let's go example by example. This example over here, right? Super big Nike tick, a recent one that occurred over here. There we go. Bam, over here, 127%, reversed very nicely. We would have got out over here, right? That means we won't get all the way down to here, right? So this is one example, very, very clear Nike tick. You want price to form a very, very clear Nike tick. You don't want it to be yeah, ugly, right? Yen, yes, you can use 21% to be even safer. Yeah, but as long as it's before 22%, right? 22, 21 is fine. Oh, Saida's asking, can you see my FIPS, right? So my FIPS, give me 1 minute. I'm going to get more water for myself because my throat, ever since COVID, it gets a little bit itchy. Give me 1 minute. I'll be right back. Hey guys, I'm back. All right. So the FIPS that I use, right? I throw up 138, 141, and 145 here just to observe a bit more, right? I do notice that price also tends to reverse off the 138% a bit, right? We can see some examples in it later, right? But I'm still trying to understand it a little bit more, right? Imad mentioned 141.4, which is an actual FIP retracement, which I'm trying to observe a little bit more. But my stop loss, I usually put it at 145 level. I'm always trying to kind of fine tune it, right? To see if we can even put our stop loss a little bit closer. Because in this case, right, if we look at our short entry, if we short over here, right, and my take profit was at the 23%, maybe slight up, this would have been about the 23%. If my stop loss is at 145, my risk reward is still pretty decent, right? Is 1.44. If I can tighten it more, right? If I can put my stop loss like at a 138, right? Then my risk reward is almost double, right? It's 2.3 now. So I'm trying to find ways to actually fine tune the stop loss so that it can be even tighter. Because when a trade does work out, it does reverse very nicely, right? I'm thinking that the closest we can put is actually at the 141. Currently it's at 145, right? I actually think that you can tighten it a little bit more. Try to get to that very nice 1:2 risk reward ratio. Yeah, but this is just some of the things that I'm trying I'm observing a little bit more. I'm still trying to figure out these numbers over here. 127 is very clear. All right, let me show you just some additional examples. Right, I think this could be one of it. Right, there we go. Okay, so in this example, let me see over here. You can see, all right. Just so it's a little bit neater, I'll just put it here. Right, so in this example, we can see that price comes all the way down to 127% over here. Right, it goes down all the way to 138, and then it reverses back up. This is the importance, right? This is the importance. Okay, by right, depending on the trading strategy you use, you would have been at break even already, right? You would have closed partial profit and be out at break even. What I mean by that is because if you look at this movement over here, this green candle is price closing down here and going all the way up, minimally closing up to here. So if I had my retracement all the way down to here, and I'm going to add in 0.11, you notice that 11%, I will have closed part of my trade, right? I will have closed part of my trade and move the stop loss to break even. So on the next red bar over here, that is where I will have got out at break even. So I will have actually made a partial profit and break even. Now this is a unique example where price then goes down to the 138% and it bounces up. So this is the reason why I've been trying to observe this 138% retracement. The interesting thing about the 138, this 138 level, right? Okay, I'll touch about the interesting thing later, right? So the important thing to take note of is that you notice that when you trail price and you bring your take profit all the way down to here, right? As price goes down, you just a dynamic TP down. What you then notice is that if price did reverse back up here, right, you will have take TP at the 22% up here. Okay, before it even does anything else. You might think that this is just another small movement over here, but when you're trading it in real time, it is very scary, right? Because you have no idea what's going to happen, right? So Desiree is also saying you've been getting wicks touching the 138 pretty often, right? I actually think, right, this is a different approach which I tested the Nike tick strategy with 138%, and it's also pretty profitable. So one way which you can do this, is, and this is a little bit advanced, right, is that you would then have two entries. You get in once at a 127, right? You get in once at a 127 with stop loss at 145, right? A stop loss at 145, right? And you have the really tight 11% break even and partial profit. Okay. And you get in one more time at 138%. If you get in one more time at 138%, your stop loss is also at 145, right? In this case, what happens is that if you have a long position, here, right, and your entry is at 138, your risk to reward can go up to 1:4, right? It can become a super duper trade, right? So that's one thing which I'm playing around with, and I actually think it might work out, right? You can risk 0.5% of your trade here, and 50% of your trade here, another 50% of trade here. Because if it touches 138 and it does bounce up, you could still close up part of your position in profit, right? But if it really touches 138 and bounce up, with this better stop loss, better entry placement here, and the stop loss at 145, right, you could actually get a fantastic trade. Okay. Yes, you split the risk between the two trades. You don't double in, rather split the risk between the two trades. Okay, I'm seeing scale trade. Yep, that's correct, Fabio, right? Because I mean, if it happens so many times, right? If it keeps touching the 138 and it reverses, it sometimes touches the 127 and reverses right away. Those could be two really, really strong reversal levels on Fibonacci, right? So why don't we play both of them, right? It just at 138, you know, it could be even better because your stop loss will be so tight at 145. Your risk to reward on that trade can be a Hollywood trade, okay? Imad is saying, I've tried not too many to anticipate the reversal price by drawing a fib level to exceed the 23% lineup with the swing low, for example, in the pound dollar. Oh yes, with the swing low pound dollar. Okay, I don't exactly know what you mean by that, but I roughly understand. Right? Nike take on pound dollar I did yesterday went to the 30% and appears to be happening more. So let's see what Simon drew, right? I think Simon did a pretty good analysis too, right? We got Simon here. Okay. Price broke out of a descending, approaching pivot. Pivot is here, okay. 127%, very nice. 161.8 feet projection. We technically don't do 161.8 feet projection this way, but it's okay, supporting argument, right? It did reverse quite nicely to the 38% over here, right? It not bad. It still kind of works out well, right? So it's yeah, I think it's a pretty good trade. Nice reaction. TP at 23% exactly. It's great to see you guys making money, right? Yeah, it's great to see you guys making money over here. Nerves are still. You stuck it out, right? I'm not sure where is your TP previously, Simon, right? Oh, the 23% too. That is good enough. You don't always need to catch the 38% because in this example here, I'm just going to delete some of the trades, right? In this example here, this is a pullback support, right? Your 23% lines up with a pullback support. That is why, you know, on hindsight, it's great that it reversed to 38%. You managed to catch this additional move over there, right? But, right, it could have equally worked out in the other direction, right? So you know that in your locus of control, you have more control if you take profit over here. Over here, this part, if you try to get take profit over here, that is more wishful thinking, right? There's a lower chance that you might get that, right? So there's in trading, the more you're in control, the better it is, right? So you're in very good control when it comes down to the 23% over here. But the moment it goes beyond 23%, you are a lot less in control, right? So play to your strengths, guys. That's very nice. That's very nice. Okay, good stuff, right? TP hit. Let me give you diamond hands, right? Hey, we got custom emojis now. You can give your own little diamond hands if you want. All right. Okay. Follow the strat. The first trade should have the TP move to the entry price touch 1-3. The TP move to the entry price. Yes. Right. If you don't want, so Vincent is asking if you follow the strategy over here, right? If price comes down to the 138, what should you do with 127, right? You could. I'm a little bit torn between idea and validating it, and let me think. I'm a little bit torn between whether the idea and validation should be at the whether the idea and validation should be at the 138%. Yen is asking, is there a limit to the Nike ticks shorter leg? Now you notice that the Nike ticks shorter leg will always be shorter because of the nature of the Fibonacci extension, right? 127 means that it takes the entire length of this shorter leg. It goes beyond the 100% project retracement and it goes all the way down to 127, right? So just because of that, the shorter leg will always be shorter. There's no limit to it, right? I think we can have two entries. I'm just thinking, where would the idea and validation level be? I have a feeling that 138 would be good, but okay. Technically, if you want to play it safer, right? If you really want to play it safer, then your idea and validation level should be for the 127 trade. For the 127 trade, if you went in a full your full 100% risk over here, right? If you went in your full 100% risk over here, 138 should be your idea and validation. You should look to try to get out. If price comes down here and you know it reverses to here, you get out at break even. Okay, that if you went in your full 100% here, because if you go full 100% here and then you go in on another 100% at the 138, right? You know it's almost like risking double, right? You have 200% floating, right? Hoping for a retracement up here, right? So it'll be more prudent to get out of this trade, right? Because the thing is that sometimes we might be too optimistic. We think that price is going to come up here and it's going to go all the way to our take profit, but it might come here and it might continue going down. If that happens, you get stopped out and you lose 2 trades, right? So it'll be better to protect yourself, right? And because you have a better entry over here, it's okay to close out this position if price reverses to your idea and validation, right? That means your take profit will be moved to your entry level, right? Because this trade here, the 138 here, would back you a good 1:4 risk to reward, and that is good enough to make enough money. That's good enough to cover for the losses, for the potential profits over here. Okay. Now, so some additional examples, I guess. One great thing I love about the Nike Tick is that, well, I bet I can just draw it over here. And you can see over here, just as perfectly, right? Price touch this 127, touch it, and it dropped very, very nicely. It happens so often, right? It is a little bit scary. Now, the thing with the trades, right? Most people put their pending order over here at the 127. You should ideally be putting your pending order. If I have to put a number to it, right? I'll put your pending order at probably 126.5. Okay, where did it go? Oh, 1.265. I know it's a little bit hard to see, right? But I would, instead of putting it at 127, I would then, because most of the time, price comes up here, and if you put it right there, because of how accurate the entry is, right? You sometimes don't even, price doesn't feel you, and it just reverses, and you miss a trade. Okay, let's talk about variations over here, right? So it's better to put your entry slightly lower. How much lower? Probably the 126.5% will be enough, or 126.2%. Let me just see how 126.2% looks like. 1.262. Yeah, probably 1.26 might be okay, right? Here, yeah, 1.26 might be okay for your entry, because that allows us to get in, factor in a little bit of spread when we get in on these trades, right? Because too often, it's just too accurate and it reverses. Now, when it reverses, when price comes all the way up to maybe here, it doesn't get your entry and it reverses, get out of the trade. Okay, remove your pending order. It's okay. I know it sucks when you see that price miss your entry. Sometimes it touches your entry, right? But because of spread, it doesn't feel, right? And you see it reversing very nicely, and you go like, oh crap, I just missed it, right? When that happens, remove your pending order. It is okay. We will live to fight another day. Okay, we live to fight another day. We just wait for the next trade, right? Because what tends to happen is that if price comes back up again, right? Price comes back up again, it usually doesn't respect this as much anymore. It just goes all the way up. The Nike Tick is only useful when you are the first to arrive at the party. You get in when everyone is panicking. You get out, when everyone is running in, right? So that's how you trade the Nike tick. You need to be in before everyone else. Many people, right, in terms of understanding trading psychology, many people are then, right, looking for the pullback over here, right? The Nike tick that happened over here, the moment this happened, right, it comes back. A lot of people are looking at the pullback over here, looking to buy the pullback, buy the pullback, and then now they're looking to play the move all the way up, right? We are one step before them by getting in on this trade and getting out when a whole influx of orders are coming in, right? So that is the style we trade the Nike tick. Okay, yeah. So in this one small example here, right? In this one small example on pound dollar, we got one Nike tick over here. We got one Nike tick over here. I think come down to here, we got one Nike tick all the way up to here. It happens so often, right? Is this one of it? There we go. This one would be really, really great, right? You can see 127, right? It went all the way up to 138, and then the reversal, right? It goes all the way up to down 22%. Would have been really, really good trade too. I believe it could have a nope. Oh yes, so the bonus criteria, right? Some of you guys were asking about the bonus criteria. Bonus criteria is where you throw in additional stuff like this, right? Bam, bam, bam. See, is there any additional levels over there? Okay. I don't, as in, are you asking if I use the 161? So the problem, the 161, I have not tested it that much, right? I have not tested it that much. Most trades seems to work well at the 127. I have not tested the 161 as much, but I do think the 127, at least for this reversal strategy, it should be our focus, right? I'm not even sure about the 161 anymore. Let me see if there are some like what happens if price goes all the way to the 161, all the way down here. Maybe this Nike take over here. Nope. I'm not too sure about the 161. I'm actually curious to know about this move here. Oh no, because this move here is a little bit messy. Okay, I think I'll look at one last example over here. This is the one with a confluence that we can look at. Okay, so we got one Nike tick over here. Oh, sorry. This is what I mean by having a bonus criteria. One Nike tick, right? And we have our entry bar replay feature, and I got entry over here, right? So this is our entry, right? And I believe if you do a Fibonacci projection, right, you do a nice little zigzag. You got the 78.6, it kind of lines up pretty closely there too. If you have two levels that line up, right, still use the 127 as your key entry level. Okay, still use the 127 as a key entry level. Desiree, I'm not sure which one were you referring to, but yeah, so this I will use the 127 still as a key entry level. You notice how very nicely it touched this level and it reverses all the way down. So even though price continued to go all the way up, right, we already made the money on this trade over here. This was enough to make the trade. Just one bar itself was enough to make the trade and give us some good money, right? Vincent's asking, what do you think if the negative 27 FIB level, the projection FIB level, and a bigger retracement level are between 127, 145? They don't line up nicely, but they are between these two levels. You still take a trade. Okay, so Fabio is saying that what happens if we got 127 here, and then we got a Fibonacci retracement, maybe negative 27 here, a Fibonacci projection, bam, over here, right? So we got all of it, and it becomes one big blob, right? One big blob over here, right? In terms of the entry, 127 will still be over here. In fact, in this kind of circumstances, it is even better because Now for price to go from for price to, when you hit your entry over here, when price reaches over here, it needs to break through another fib level, and it needs to break through another fib level before it can go to your stop loss at 145, right? In a case where maybe you get like this kind of situation, 1, 2, 3 all together, you can even put your stop loss, you can even tighten your stop loss a little bit more and put it just slightly beyond this key area over here. Okay, I love it when there's this kind of confluence, you know, when multiple fib levels line up together, even if they don't line up at the same level, right? If they line up on top of each other, that's even better, because it tells me that price needs to go through even more stuff just to get to my stop loss. Okay, no worries, Vincent. All right, guys. Thanks for staying throughout this entire webinar. I want to encourage you guys that now that you know, look out for Nike ticks in the VIP room. If you can find them, share it with the rest of us, right? And we'll look at them together, right? And you can see in some really good examples with Simon, with Emad. If you find a good trade, you share it together. Everyone makes money together, and it's amazing. All right. Okay, I'm glad you finally understood the Nike tick side. All right. But yeah, it's been a great session with you guys. Thanks for tuning in. Tomorrow it might not be me doing the webinar, right? But you can still find me in the VIP room, right? Tomorrow it could be Jin who is going to do the webinar, right? But yeah, it's been a great session with you guys. Thank you for staying throughout, right? Remember, stay safe, trade safe. I'll catch you guys in the VIP room. Yeah, thank you, Desiree. I'm glad we finally have like dedicated session on this topic, because there's so much request, so much confusion over it, and if all of us know how to use it, look for it in the VIP room together, find the trades together, let each other know, evaluate it together, right? I think we can make a lot of money together. Okay. All right. I keep on. I will try. No guarantees. Okay. Thank you very much, guys. Thank you, Joa, Pedro, Kerban, Joa, Yen, Leandro. It's great. The recorded video, I will try to get them released this week. Okay. I will do it myself. Right. Okay. Kerban, I'll answer your question in the VIP room. All right. That's it for me. Stay safe, guys. Trade safe. Peace out. Right. I'll see you guys around then. Take care. Take care. Bye bye. Adios.